Welcome back to the Retire Young radio show. I am your host, Joshua David, and we are combating financial illiteracy. We're raising awareness to that to help people make better investing decisions with that confidence. Now, we have a lot more to discuss in this final segment, so stay tuned. But I want to continue the retirement topic because that's such a hot topic. We had so many people call in, and self-directing is, I guess it's that thing that a lot of people don't understand when they have retirement accounts. A lot of people think that they have to have a broker or an advisor, or have to pay somebody to essentially hold their capital. Mm-hmm. Now, that's really what's happening. That key is holding their capital, and they're not really making investing decisions for them. They're just placing them in a fund and letting it sit for years and years and years, hoping that they get a return. Well, over time, that's what people lose, is that time. So let's talk about, why are we seeing so many people want to learn more about self-directing so they can make better investing decisions themselves with their best interest in mind?
Yeah, I think there's really two words that kind of are appropriate when we're talking about self-directing and why people do it. Fees and choices, those two words. Elimination of fees. We talked before, and we talk about this all the time, what a negative impact fees can have on what you could end up with that that probably will have a significant impact on the quality of life you live when you're in retirement. If you can eliminate the fees, and we're talking about the potential, if you start early enough and you're putting money into a retirement plan, we're talking about the potential for hundreds of thousands of dollars being lost in fees. And then as far as the choices are, and by the way, then you eliminate fees. When you self-direct, you don't have those fees. And as long as you invest in something other than a mutual fund, which has high embedded fees in it, then again, you eliminate those. In the choices, that's where the choices come in. If you want to invest in mutual funds, you certainly can. That is your choice. However, you have other opportunities, other options. Options happen to be one of them.
Well, there you go.
Futures is another one. Foreign exchange market is another one. Inverse ETFs. An ETF is an exchange-traded fund. It is a basket or a gathering of stocks that relate to a certain either index or sector.
So it's kind of like a mutual fund, but less fees, right?
Right. The fees are much lower, plus it trades like a stock. A mutual fund you cannot trade during the day. So if, let's just say something catastrophic happens and the market starts to crash, all you can do with a mutual fund is sit and watch it go down in value. With an exchange-traded fund or individual stocks, you can sell out of a position if you want to, but there's also something called an inverse ETF, an inverse exchange-traded fund, which goes the opposite direction of the underlying. So if it is an S&P 500 inverse ETF, it goes the opposite direction of the S&P. The S&P is crashing. That inverse ETF will go the opposite direction. And you can use those in your retirement plan.
Well, think about this. That was one of those common mistakes, is people are in that one direction. Well, there's another opportunity in retirement accounts.
Yeah, there are strategies to learn that will benefit you in up markets. There are different strategies to learn that will benefit you in a down market. What about a sideways market where the market's not doing anything? Can you do anything there? Absolutely. There are option strategies that can be utilized that are income strategies that will benefit you in a sideways market. Options, by the way, are probably the most versatile of all the assets. It can be used in up markets, down markets, sideways markets. It can be used as protection. You can have an option strategy that will provide a potential benefit if the underlying asset's going up, down, or sideways at the same time with one trade. You can use options to actually buy something get paid cash to buy something at a lower price, get paid cash to sell something at a higher price. And these are things we talk about these in our classes, and our students understand how to utilize those assets. When you're in retirement, if you have a large stock portfolio, for example, options can be used just to continue to provide additional premium off of that stock portfolio without selling stock. It can also be used as protection. But I think in retirement, there are some things that are really critical. One is protection of your capital, preservation of capital. And a lot of people, unfortunately, back in 2007, retired in 2007 thinking that they were going to be in great shape because the market had just been continuing to move up. It was up 100% between 2003 and 2007. All of a sudden, the market crashed. It went the opposite direction. The S&P was down 57%. A lot of people that retired in 2007 found themselves faced with maybe 30, 40, 50, or 60% less money in their retirement accounts than they thought they would have. That has a significant impact on how you live. And that's, again, one of the things that you don't ever want to have happen is a large loss like that.
Well, that's the key, is always to be able to protect what you have. I mean, having these other opportunities, utilizing these other asset classes, the options market, the futures and the Forex market, but really being able to do this with ETFs. I mean, that's like kind of like a mutual fund, as Al was talking about, but much lower fees within that. And if you want to learn more about how to potentially lower your fees or maybe even eliminate them, there's techniques and there's strategies that the smart money is using that is also available to us. Al, we've talked about a lot of different techniques and concepts today. A lot of the common mistakes that the average person or the public makes. Now, there are people listening that probably want to get into this market but just don't know how to get started. They don't know where to go. What do you use? Do you use brokers? Do you call somebody? Do you phone a friend? What are some of the first steps somebody can make to, I guess, participate in these great markets that we're seeing right now? We can't miss out on that.
Yeah, a lot of questions you just threw out there.
Pick
there's
one.
one answer. There's one answer to all of them, and that is to come into a class like we have been talking about here and learn how the markets function. Learn how you can participate. And really learn whether this is something that is right for you or not. And for some people, it really isn't. Maybe it's a time issue. Maybe it's just something you have no interest in. And it's good to learn that. And that's one of the goals in these classes, is to help you decide whether this is the right avenue for you to take. And if it is, then we'll help you put together an education plan that identifies where you want to be financially, where you are now, where you want to be, how you bridge the gap between the two, and learn to use the right assets, because people are different, and there should never be just one education path that everybody follows, like kind of a one size fits all kind of a situation. That's not the way the financial markets work for each person, because people have different needs, different expectations, different goals, different time frames,
well,
all sorts
of different
things.
State of their life too.
They're different state of their life, and so things will change over the course of your lifetime. And proper education should really have access to what's going to help you, regardless of what the situation is, regardless of what your situation is. But it should be fine tuned to you. And the way you do that is by having a plan that is specific to you. And by the way, one of the things, in addition to high fees and the wrong asset choices that will impact your potential success as an investor or trader, are your emotions. Controlling those emotions is key. And again, that's part of the risk management, but the risky part of investing really is the person investing. And you have to control your emotions so your decisions are not being impacted by a psychological condition. Fear and greed, two really powerful emotional things that people go through as human beings. The only way you can really control those is to have an objective strategy you follow that has a set of rules, a step-by-step process that really, as much as possible, takes the human component out of trading and investing. And you really have to have a plan that you follow for that. I've used before the analogy of me going to the grocery store without a list and coming home without what I went to the store for. Same thing is true here. You need to have a plan to get you from where you are now to where you want to be.
That's the key, Al. It's coming to the end of the show, and we have a lot of listeners that want to understand more about that proper plan to make better investing decisions. You need a plan that's designed to do that. And sometimes it's learning something new. And a lot of these techniques and strategies that we're talking about, they're not new. They're just different. It's what the smart money is using. So what we talk about every week, we want to trade like the smart money, not against them. Al, you always have some great words of wisdom. And, a lot of people need to hear that stuff right now. And I think you really help people out to be more comfortable and confident. Let's hear that wisdom.
Well, Josh, right now we're seeing some of the best trading opportunities that we've ever seen. It's really important to be proactive now. Look, we can't promise that you will be successful, but we can help you improve the odds that you can be. The best anyone can do is to put the odds in your favor. They help you identify an edge, And then learn protection techniques if you're wrong. Know how to protect and realize profits when they're achieved.
Now is that time to be proactive. Learn to gain an edge in the financial markets. Also, don't forget to subscribe to the podcast on Apple Podcasts, iHeartRadio, and Spotify. Until next week with the Retire Young Radio Show, retire young, my friends.